Hey guys, check this out. We have hyperscalers presenting earnings this week as well as SK Hynix, and this could be a massive catalyst for memory chips like SK Hynix and Micron. So we're going to talk about exactly why. Please like and subscribe. First of all, if you guys don't want to stick around for the entire video, bottom line is, the sector can only get so much good news until the price of these stocks finally go up to reasonable levels. And I've talked about it in various videos. Guys, look at Micron. It's at a forward PE of 6.42. The S&P trades at about an average of a forward PE of about 20 to 21. So this is extremely undervalued. So we're going to talk about exactly why, what the market is scared of, and why these earnings coming up this week could actually be a massive catalyst, finally proving to people, convincing investors that the cyclicality of the memory sector is done for at least the next 3, 4, 5 years, which could eventually lead to a massive increase in the price of these stocks. And I do think it will rubber band, right? So we've seen the price of SK Hynix and Micron go up rapidly. I mean, we've seen, 800% returns in the last year. The market's kind of taking a breather. People are taking profits. People are skeptical as to whether or not this is sustainable, and we've had this recent dip. But I do think that, the market all at once will essentially accept the fact that, this AI build out is here to stay. It's going to last many years. And when they do realize that, I think the price of both of these stocks is going to rubber band really quickly to the upside, guys. Also, let me know how you guys are doing in the market this week. My portfolio, it's down slightly for the week, down 1.16%. It's been a rough couple of weeks. Still did slightly outperform the S&P 500 and still, slightly under 1.2 million there. So we're at 1.174. Let me know how you guys are doing in the market this week. But I want to jump into it, guys. And really quickly, if you guys want to see what's in my portfolio, you can join the Patreon. Link is in the description of this video. You can see what's in the portfolio, and I show you the method that I use to analyze stocks and just high level how I'm building wealth through stocks in this market as well. So let's jump into it, guys. Hyperscalers this week. We have Microsoft presenting earnings on Wednesday, July 29th, Meta as well on the same day, and then Amazon on July 30th. Now, obviously, these are massive customers of both Micron and SK Hynix, which have led to massive demand for the chips and massive pricing power for SK Hynix and Micron as well. Now, we all know what's going to happen, right? We've had good news for the last couple of earnings quarters, and we expect more of the same, right? So, let's move beyond that, because we know, all of these companies essentially are going to say, hey, we're continuing to spend on capex, we're continuing to spend hundreds of billions this year. But what could they say, and what could, they project further into the future that could calm the nerves of investors and finally bring this forward PE up, to the point where SK Hynix and Micron could massively explode to a double or triple really, really quickly. I also want to note, Apple is going to have earnings on July 30th as well. Now, although they're not, buying HBMs, high bandwidth memory like these other hyperscalers, they do buy memory that goes into iPhones, MacBooks. You guys have seen the headlines where, they had to increase the price of their computers and I think their iPads as well, because memory is becoming so expensive. And it's estimated that memory is about 30 to 35% of computer prices just in general, right? So memory is becoming a massive part, not just of AI build out, but of, consumer electronics as well. So, if Apple comes out and says something like, hey, we're increasing the memory in our phones, for on-device AI compute, that's something we expect to see eventually. We're not sure if it's going to be this quarter, but that's going to lead to more demand as well. And I want to bottom line you guys before I jump into the details here. A lot of the, one of the things people aren't talking about is the fact that, the demand for memory chips isn't just a linear graph going up with, the build out of AI data centers. It's actually been going up exponentially because these GPUs that are used in these data centers, they become more and more complex and they demand more and more memory per individual GPU. And it's been estimated that over the last 18 months and every 18 months or so, the requirement for memory per GPU has been doubling to tripling every 18 months, and it's expected to do so for the foreseeable future. So what does that mean, right? Even as hyperscalers continue to build out these data centers, we expect those to be mostly built out in the next 3 to 4 years and kind of stabilize. On top of that, these chips are only expected to last 3 to 6 years, which means once they build these out, they're going to continue to cycle through them to update these data centers. And on top of that, as these GPUs become more complex, more, compute intensive, it's estimated that every 18 months, they're going to need double to triple the memory capacity per individual GPU. So you have, basically a perfect storm for demand to continue to skyrocket and pricing power to continue to skyrocket as well. Now we have concerns that from the consumer side, all of this, what they're calling chipflation, essentially the fact that, these things are, driving up the cost of consumer products so much that it's actually softening demand for computers and phones across the board. And, there's concerns that, maybe that will then, soften demand for memory chips as well. But almost in a paradoxical way, it's almost, counterintuitive. It's actually the opposite, right? Because the chips, in a large part, going up in price is what's causing, to a large extent, this softening in demand for consumer devices. It's, it's not the other way around. It's not like, the softening in the device sales is going to lead to lower prices in memory chips. It's actually the opposite. And this is one thing that a lot of people aren't talking about, because this cyclicality of the memory chip industry has been shifting dramatically with this AI build out. Let's quickly talk about that. So traditionally and historically, the far majority of revenue for, companies like Micron and SK Hynix was coming from consumer electronics, companies buying the chips for phones, laptops, even things like cars. Now that's completely flipped. Now the far majority of the demand is going to the AI data center build out. And as we spoke about, even once they're done building them out, they have to continually update these chips every 3 to 6 years. So we expect this to be a sustained increase in demand. And the demand from consumer electronics is actually a much smaller part of their overall revenue. Now they are diversified, so they have consumer electronics, they have, vehicles are a growing sector when it comes to memory chips, as basically a lot of things in the economy are running on, computer chips, right? As, things become smarter, things become more advanced. We have consumer electronics, we have vehicles, we have the AI data center build out. But the point here is traditionally, as the economy went through cycles, through booms, through recessions, you had, demand for things like phones, computers, iPads. These things could go up and down cyclically. A lot more cyclical than things like infrastructure, right? And people think of, this AI data center build out as cyclical as well. And to some extent it is. And they think, okay, well, this rapid build out cannot last forever. But essentially, like I've said a couple of times already in this video, once they build that out, they're going to continue to have to maintain that year after year. And, a data center they built this year, in 4 to 5 years, they're going to have to upgrade those chips. And then, the data centers they built the following year, and so forth and so forth. So really, we do expect a sustained demand for these chips. And I want to quickly talk about that in this video. I'm going to skip down in this presentation and outline with you guys exactly why we expect hyperscalers to sustain their massive capex ramps. And there's a few reasons here. One, they have massive backlogs of unfilled demand. So hyperscalers aren't spending speculatively, they are racing to clear huge backlogs. Microsoft, for instance, I'm sorry about that, guys. Let me share my screen here again. Microsoft, for instance, has reported 80 billion Azure backlog that is simply not fulfillable yet due to capacity restraints. So as they're building, they actually have a lot of this already inked to be used, right? It's not like they have this massive surplus according to the contracts. It's also notable that CEOs like Zuckerberg have said the risk of underinvesting is greater than the risk of overinvesting, right? So a lot of CEOs have explicitly said they are willing to overspend and potentially take a hit on their cash flows in the short term to make sure they don't get left behind. They're willing to take that risk. And guess what? Free cash flow going down for hyperscalers is revenue going up for chip companies like Micron and SK Hynix. Now, frontier model scaling laws, and this is what I want to talk about, guys. Each successive generation of frontier models requires 10 to 100 times more compute power than the last generation. Because of this, each GPU cluster needs exponentially more memory chips as well. And that's why not just with the data centers increasing, also the demand per GPU increasing as well, estimated to be every 18 months at a double or triple, like we talked about earlier in this video. We also have some massive hyperscalers already reporting that they're getting an ROI from this AI spend. So Google Cloud is up over 60% year over year, and Azure is up over 40% year over year. And this AI capacity, these AI, features and offerings that they're providing for their enterprise customers is driving more demand for their products. So they're already seeing some ROI. Guys, Google Cloud, a massive cloud provider, growing 60% year over year, and they're attributing a huge percentage of that to their AI offerings, right? Now, what could essentially cause a pause? And really quickly before I jump into that, I want to point out as well the fact that not only are they locked in with everything I've pointed out here, but also they have leases or purchases of real estate. Sometimes they're leasing the real estate. They also have long-term energy contracts where they're prepaying or they're pre-signing, hey, we are, earmarking this energy, because that is a massive bottleneck, or it's going to be for these data centers as well. And these hyperscalers are already mapping out and signing multi-year, 5, 6, 7-year deals for energy to provide this for the data centers as well. So if they decide, hey, we're going to flip the switch off, we're going to stop building these data centers, we're going to stop buying chips, they're still on the hook to pay for all of this energy due to these contracts they've put in place. So we have the CEO saying they're willing to take a hit on cash flow in the short term to make sure they don't get left behind. So they're going to continue to buy these memory chips into the future. They've signed massive multi-year deals with these memory providers, specifically Micron, and we expect SK, it's been reported in the next couple of weeks, to report that they're going to be signing multi-year deals as well, locking in revenue at a clip at about 50% of what they can build. And what I mean by that is, SK and Micron, they're investing billions as well into building more fabs, more warehouses or manufacturing plants to develop these chips. And over 50% of that future capacity has already been locked in through long-term contracts with hyperscalers like, Google, Facebook, Amazon, etc., specifically with Micron. And we expect SK Hynix to announce that soon as well. Now, a lot of people think, well, why is it only 50%? If demand is so high, why isn't it, 70, 80, 90%? The problem is, and this is a risk in the short term as well, Micron and SK have their own, constraints as well. Building these fabs could take longer than expected. Receiving, the infrastructure and the energy needed for this as well, that could get slowed down with permitting, etc. And they don't want to be on the hook to say, hey, we're supposed to, give this to the customer, but we're having delays in building these fabs. So 50% is a very healthy number. It gives them a cushion in case there's delays, but these things are pretty much put in place, right? Now, what could cause capex to pause? Now, these hyperscalers have the money. They've signaled that they're willing to spend the money. Some things that could happen is running out of power. That is possible. So one example is in Virginia, I believe it's Northern Virginia, there are permits laid out to build out these AI data centers, and the amount of energy that would be needed to fulfill that demand is greater than what's currently existing on the grid for the entire state of Virginia, right? So something has to be built out here, and we don't know exactly how long that's going to take. That could be a bottleneck, right? That could slow things down. These are risks we have to take into account. Also, just a shortage of the memory chips themselves. And this is why, Micron and SK Hynix, they've been getting a lot of flack because they're going to be spending billions on increasing demand. So a lot of people think, well, if you're increasing demand, you could overbuild. We're actually at a greater risk of the opposite, right? So if Micron and SK don't continue to build out, they could lose market share, right? So, they're in competition to build out to make sure they capture that market share. If Micron doesn't build out, SK could, capitalize on that, and vice versa. So that is a real risk. And again, Micron having these long-term contracts really mitigates their risk to the downside when it comes to overbuilding, right? So these are really some of the massive things in the pipeline, guys. We talked about all of this, demand, not just from hyperscalers building out, the fact that hyperscalers are expected to announce the continued spending in the coming quarters. And one thing I want to point out here is, a lot of people say, well, to calm these cyclical fears, why don't we hear hyperscalers say, hey, we're going to spend, $300 billion in 2027, 2028, 2029. Why don't they give specific numbers further than a year out? And essentially, guys, CFOs don't really like to announce things more than a year out because things could change, right? There's a chance that, and we have to acknowledge the risk, software ROI for these hyperscalers could take a little longer than expected. And if that does happen, well, first of all, they can't really switch off the build out of the data centers themselves because of everything we laid out. They're pretty much locked in, but they could slow down the upgrading of the older data centers, right? So if they have data centers that need to be upgraded in a couple of years and they're not really getting an ROI, they could hold off on those and just continue to use, the more recently upgraded data centers and then upgrade the other ones as demand picks up and as they're getting an ROI. There's also things like bottlenecks, right? They could, not have enough chips. They could not have enough energy. So for them to really provide fixed numbers more than a year out, it's really difficult, right? So we don't expect really to have numbers, announced further out than a year. But what we do expect is for them to announce specific numbers for the next 12 months and then to announce that they do expect year over year in 2027 and 2028 to spend more than they have been spending over the last couple of years. And that is a bullish signal, right? And one thing I want to point out is they do expect analysts, that are investigating this, they expect a continued growth until 2030. And even through 2040, we still expect a 4 to 6% year over year growth. So currently, all of the data is pointing to continued growth. Yes, will it flatten out? Of course it could flatten out, right? But really what we expect to see, and I want to show you guys on the iPad here, is we have this massive growth, and then you might see a little cyclicality like this, but we continue to go up, right? And a lot of people are thinking that we're going to have this massive crash back down to normal, and then we'll come back here. That is not going to happen. That is basically impossible. But what we do expect is this massive growth, like we showed here. Sorry, let me back out of there. So we've had this massive growth. We're basically right here currently, right? And what we expect is to actually continue to grow, maybe not at this massive vertical line rate, but kind of like this, right? And then eventually, in around 2030, a continued growth, right? So that curve continues to bend, but continues to go up. I'm sorry about that. You're having trouble seeing that. But we've had this massive skyrocket. We're here. What we expect is this to bend initially, but still go up. And then around 2030, really bend again, but again, still continue to go up. We expect this continued growth really until 2040 at least. And then even then, we expect it to continue to grow because at that point, we expect the AI build out or the AI data centers to really account for most of the data center spending. And again, they'll have to continue to upgrade these year after year. So guys, let me know your thoughts in the comments. Again, if you guys want to see what I'm buying in the $1 million portfolio, click the link, join the Patreon there. We have that $15 tier. You can see what's in the portfolio, the method I'm using to analyze stocks, and just build out my portfolio in general. And if you want to get that higher $30 tier, we go deep into the method that I use to analyze stocks and build wealth, as well as a 90-day challenge we're going to be releasing in the next few months to really help you implement the method and show you how to build wealth in this market. So guys, thank you so much for watching. Again, let me know your thoughts in the comments, and I'll see you on the next video.